turn to the global cues, and I want to now bring in what the market is doing. If you can put the Nifty up, 221 points lower on the Sensex. Nifty is down, and you mentioned that Asian markets are down as well. I want to make one point. The globe, and I mentioned this earlier, I think the week before last as well, the global opportunity cost for capital is moving up. And what is the one indicator of that? It's the US 10-year. The US 10-year yesterday hit a fresh 2016 high of 2.4919. I mean, it is just short of the 2015 high of 2.5%, right? The 5-year has hit a higher 1.933, which means it's taken out a resistance which actually held for a couple of years. The reason it's important is because yields here are falling. Yields in the US are rising. The hedging cost hasn't really collapsed or anything. We did see that big, drop from 6% to about 4%, 3.5% or so, but it's again kind of gone back a little bit. So this really will put pressure on investors to justify, their investments in markets where they at some level may not be very sure about the near term or even the medium term. And will India fit that criterion? I think it does in certain sense because of this demonetization and the impact it may have on the corporate sector in a large way. It postpones the pickup in earnings growth, right? Which one was expecting to happen in the second half of this year. It won't. Maybe in the next half. So I think the opportunity cost is rising. Later in the day today, you have the jobs number, which I think will be crucial as well. 180,000 is the consensus expectation. Let's watch it. It'll crystallize expectations for a Fed hike later this year. I think
how many going forward?
How many as well? I think these are two critical things to watch out for. The yield, the rates market, which had been calm, by the way, so far this week, nothing. Right, after a relentless move, but it started moving once again yesterday. So I think we'll need to kind of keep a very close eye. I think we've got Michael Everidge